Here we go. Hey guys, welcome back. It's been a quarter now since we've had a live intraday session, and we're always humbled and honored to be with our guy, the legendary Cookie Monster, the pivotologist. Cookie, welcome.
Woo! Hey guys, how are you doing?
We're,
How are you
we're
all doing?
fantastic.
Yeah.
How are you liking this market and what it's doing right now?
I mean, it's making my hair fall out. I'm not gonna lie, but it's fun. I mean, it's fun if you like. I mean, this is my life, isn't it? Trading. So I think it's fun that it's not just a clean up trend. I know some people don't like it, that it's really bouncing around and going all over the place, but I don't mind that. It's sort of challenges to think a little deep, a little differently, a little deeper. So
A
I
lot
don't
of
mind the
people don't
challenge.
like it, I would say, Cookie. You're being you're ingratiating the point a little bit. A lot of people don't like it.
Yeah, I know they hate it, but I think it's also because many people aren't full-time traders, and so they got day jobs and they just want to make money whilst they're doing their day jobs, right? And they want to buy shit and just hold it, and then come back, check a week later, and they're rich. But the market doesn't let you do that. So if you're like us or some of us who are full-time traders, it's not that bad. But yeah, very, very, very mentally challenging, definitely. So I'm a bit tired, but I'm looking forward to this session as always. I always look
Yeah,
forward to this.
and,
Yeah.
and we know it's early for you or late for you. I don't know, or one of the two. But
Yeah.
it's way after hours across the other side of the world. So we appreciate you taking the time to hop on intraday. But enough of all the niceties. We're
Mhm.
3 minutes in. Cookie, you got the cues pulled up there.
Yeah.
Looks really bearish to me.
Oh, it's a nightmare, isn't it? It looks
I believe they
terrible,
call
doesn't it?
that double top.
Yeah, it's a double top. I mean, we've been having those forever, right? But I don't know. Do you want me to just go through this? I can.
Sure.
Yeah. All right. Okay. Well, I mean, one of the things I was thinking about ahead of the call today was I don't want to surprise with new stuff. Well, actually, I have got something later which is new, which
Ooh.
might shock you a bit. Because I like to wow you a little bit with fancy charts and stuff. But
I love the tease for later too.
yeah, I've got something that will blow your socks off. Silence there. Excellent. That was really good, wasn't it? I planned that.
I'm
Anyway,
not
so
wearing socks. That's why there's silence.
yeah, because they're not wearing any socks yet. Okay, let's go through this. So this is a chart that we've looked at each quarter for the last year. I mean, I think we first looked at it over here in December of last year, or somewhere around about here. So we looked at it each quarter, and I think it's good to just update. I mean, first thing to notice is the chart from 2009 is just gone from bottom left to top right, and when you zoom out, as you do, even this was pretty hairy. I mean, it lasted a year, but in the grand scheme of things, we've had a few of these along the way. But let me just share with you where we currently are, which I think is quite important. And it's this lower. Do you like that zoom? That's really cool, isn't it?
I do
So
love it.
this is a downtrend line that I've been looking at for months, right? So this is where we hit that peak in the summer. So this is already on the chart. And then when we last looked at this chart 3 months ago, um, I was hoping that this period here that lasted the summer wouldn't happen until here at 440. I was like, fuck the bears, right? And all that stuff. We'll just go for another 3 months and we end up at 440. Right. But obviously that didn't happen. And we got a consolidation which looked remarkably similar to the one after COVID, which we talked about. Right. So we got this, and it's in the same channel, same area of the, it's, same 4 months after the COVID bottom, same 4 or 5 months after the COVID bottom. We get this parenthesis, and then hopefully we do that, right? So the only thing that was stopping this continuation into this yellow area that I've marked B is this downtrend line from the all-time highs, which we broke out of last month, right? So we broke out of it last month, but what I was looking at was this downtrend channel here. Right, so this was my early clue, early warning that this might break out, which was here. It was actually coincides with a 9 monthly moving average, which is always nice when you've got the moving averages lining up with the pivots. And so that happened at 358. And I remember pointing out, I think it was on StockTwits, that if we go below 358, I'll hedge, reduce and hedge, because what's the point? If it's not going to break out, then you might as well limit your exposure in the market, right? But we powered through 358, and then we closed the channel all the way above. We closed the candle all the way above this breakout. So SPY was a little bit further behind, but it looks similar. And so this month, there's 385, right? So the low of the month is 382. So you can see there's a tiny wick below the 385 there. I was okay down to 379, which would backtest this breakout. So for me, this month with the pullback that we're seeing so far, everybody's, this is one of the reasons why I completely agree with what GP said, I think, a couple of weeks ago, which, about this lockout rally, right? Everybody's saying that now, but I remember him saying that a few weeks ago. And for me, it was, as long as we hold 379, nobody's going to be able to get in, right? So that would have been a very modest pullback. So the high in November was 394, so down to 380 would have been about 3%, right? So, I was willing to see that, and we haven't even gone there, right? We haven't even gone to 379. So as far as big picture is concerned, whilst we hold 379, there's absolutely zero risk. Huh?
I hit play on YouTube, so you heard the feedback.
Oh, no, I don't know what I heard. I thought I was okay. It doesn't matter. But so 379 holds, and then we're off to the races, right? Even though we haven't taken out this high of November yet, but it's holding a break. It's holding two breakouts. It's holding the breakout of this downtrend line from all-time highs. It's holding the breakout of the green uptrend channel, and so from here, there's nothing really stopping us from going to. Let me show you what could come next. There's nothing really stopping us from going to the top of this channel B, this large yellow channel. And the reason why I say that is because, for me, we talk about fib levels and stuff. The most important one is 50%. Everything is symmetrical, right? It's all about symmetry in the markets. And so we break out of here, then we complete the other side of this half. We've gone, so the pullback was to this level here, which is halfway into B. And then we go back, we go to here. Now that currently, so I've marked a pivot here, which is in April of 437. But in the month of, let's say, January, it's 441, right? But so we're looking at this 420, 430, 440 level that I've been looking at for a while as to where the market might struggle. And so just as far as big picture is concerned, just not to dwell too much on this chart, as long as we hold 379, then I'm looking for this area over here. And once we get there, I think we'll have a pretty long consolidation. And the reason why I'm thinking that is most of the major, I don't know, do we want to call what happened in the summer like a major consolidation? A lot of people are panicking. It did last a fair bit of time, didn't it? But I think we'll get something possibly worse than that.
Yeah, definitely consolidation. I don't know that I would call it major. It did last a few months, but yeah. And there was a little bit of fear probably, and anxiety is probably the better word. But I don't know that I would call it major. It moved within a small range, right? In the grand scheme of things.
Right. GP, what was that?
I said it all really depended on what you were holding, because if you were holding anything like Roku or Shop, you were down 50% in a few months. So and if you bought from the lows, you're still up, but it's still frustrating, right? No matter.
Absolutely. You're right. No, you're totally right. You're right. The thing is, when I'm looking at the indices and I see like 5% pullback, I'm like, who gives a shit, right? But
the dispersion trade, that was the bigger problem, right? The dispersion underneath was pretty sizable.
Correct. That's right. So yeah, but just in terms of what might happen at this next boundary. So the insight here, as far as price action is concerned, is most of the volatility will occur at the boundaries and at the center line of these large rectangles, right? So whether it's over here or whether it's next over here. And if you look back, so if I just zoom out again, let me just put auto zoomer here again, right? All of these boundaries have seen months of consolidations, right? The center lines and the boundaries have seen months and months of consolidations here, maybe a little bit less so. So I'm guessing that 440 is going to be a real pain in the nuts to cross. And we might be there maybe even like towards the end of next year, we might not get much higher than 440, 450 by next autumn, for example, right? Which, if you think about it, you say, well, shit, then that means there's only 20%, which is not bad. It's okay. If we can do 20% in 2024, that'll still be a good year. It'll be a great year. Mm-hmm. I'm just thinking that, we'll talk about mindset again. You mentioned that just before we started the call, and that's, what tends to happen is people are very reticent and very slow to jump on breakouts. And I think we mentioned it on the call last time as well. And if you miss that 1 or 2 month window, then you end up just scraping and surviving for 6 months, trying to make up in really difficult markets what you could have done very easily in the first 2 months had you not had your head up your ass, which is what most people have, right? Everyone's so fucking bearish. And so they're all fighting this, the macros this and the fundamentals that, and I don't know. I mean, I think, in the beginning, people ignored the technicals, and now they're ignoring the fundamentals. And the picture is not as bad as many people think. The economy is not doing that bad. The technicals are supporting a stronger market. And so whilst they still have their head in the sand, they're missing out on possibly the easiest part of the move. And then by the time they get their heads round to, well, maybe there's something in this, they'll end up getting really frustrated around 430 for 4 months, and then they'll give up. And that's basically what the market's done every 6 months. Right.
But I have a question for you.
Go ahead.
So what would you say to someone with the mindset that they know what's coming, aka macro doom?
Yeah.
And so they are being cautious to know what's coming, so they're not getting long and potentially missing out on a multi-year bull run here.
Yeah. I would say that's one, nobody knows for sure. So why don't you let price tell you? Right. So rather than relying on what you think is going to happen, why not let price tell you what's happening? Because price won't lie. I mean, you might get fake outs and shakeouts and stuff, but if the trend holding, then I don't give a shit about your macro story, right?
Yeah, I agree. I was just wondering how.
No, I'm not saying I don't give a shit about what you just said. I'm just saying.
This is what people tell me when I'm like,
yeah. I agree. I understand.
I don't understand what the fear is in the day and age of, dude, I'm down 1 or 2%. I can just click a button on my screen and I'm out. No one's really holding like a $30 million position, right? Most people are probably holding max couple $100,000 position. You can get out as fast as you can get in. So how does someone overcome that kind of mindset of, because we're talking about mindsets, right?
There's 2 things here, right, that come to mind. First of all, switch off the TV, right?
Yeah.
Just watch your shitty sitcoms and your cooking programs and your travel shows, but don't turn on the TV for anything financial related or the markets related. That'd be the first thing. Let price be your media for what's happening in the markets, right? And and the second thing is that understanding that price is deliberately trying to shake you out for these periods. So in other words, the reticence also comes from the fact that they're being conditioned to be fearful of the markets because of how prices have moved, right? So it's like, well, you tell people, there's not, whilst the economy is looking okay and this is going on, you should be in the market. You should be at least partially invested. And they're like, okay, I'll give it a go. And then 3 days later, they get shaken out. And that happens over and over again. And so, and then they think about the stuff they've heard on the media. And then everything's like, well, hold on a second. I'm not, the markets are really hard. This might still be a bear market for all the stuff that I've been reading about. And it's just really difficult to change that mindset. So one way in which they can do it, apart from turning off the TV, like I said, is have a much better understanding of price action. Right? And I've made it my TA goal really is to understand price action more than anything else. So when I talk about projections and stuff, it's based upon not 10,000 hours of looking at price, but 10,000 hours looking at how prices have moved historically and currently in respect to the moving averages and stuff. So when I speak with a certain level of conviction, it's based on that. And I think whilst not everybody's going to do that, they don't have the time maybe, or they don't have the energy to do it, it's certainly worth their while to understand how prices typically move in a market like this and be better prepared, right? Because I think it's all well and good having the right mindset about the economy and stuff, but if they're getting shaken out all the time, then they're just too frightened. They're just too scared. And I understand that completely. I mean, I'm far more empathetic, right? Have far more empathy now with people who are struggling in the markets than I ever did. And it's just because of how atrocious price action is for the untrained eye, right? And I want to talk a little bit about that during the call with some charts, right? So one of the things I think I mentioned in that long shopping list of things I wanted to discuss on the call was I want to show you exactly how prices have moved from March this year, and that none of it was random. Zero, nothing was random at all. I can explain all of it. And again, that sounds really effing arrogant, but I've been looking at this hour after hour every day for years now. And I've created charts to reflect what I think is going to happen in the market. So I think what sets me apart a little bit is rather than charting candles, I'm charting the universe behind the candles based upon what price has typically done in the past. That's why they look so different, because I'm charting based upon what I think is going to happen. And it does. It fucking happens. And that's not because I've got some sixth sense or crystal balls and stuff. It's because markets are symmetrical, price is symmetrical, and you get even leg moves, you get consolidations which look similar, you get moving averages which move in the same way. And that you can model and you can forecast.
Well, let's jump into it.
Yeah.
Okay, yeah. You just blew my mind, Cookie. I've known you for years, and you just hit me with some genius brilliance in a different way.
Okay, let's go straight there, right? So I won't bore you with this because this is pretty obvious, I think, right? So let's take a look at this chart. Now, this is my, take a deep breath, right? So this is my ES Futures daily chart. And it's a chart that we've looked at on the call last time, right? Now, what this shows you are two complete cycles in 2023, right? So you've got the cycle that began at the beginning of the year. And remember when we looked at this chart in September, end of September, we had these ellipses, and that was really it. There wasn't really much more on this chart at that time, right? But as the market moved through this consolidation, let me just get this a little bit closer up to here, right? So this is the consolidation that we saw from the summer. And I remember marking, and I shared a version of this chart back in, I don't know, maybe a couple of months ago on StockTwits, but I've added to it. But one of the things that I was looking at was how the market bottomed back in March over here, right? Now, I want to share this with you because it might help those who struggle with understanding the importance of trend lines, right? What I mean by that is what happens when trend lines are lost or broken. And, and for me, there's relative importance there. It's not the end of the world when a trend line is lost. And that's a lot of what you see and read about, for example, in StockTwits. If a support is lost, it's the end of days, right? That's often what you'll hear. But one of the things I want to show you is this. So, for example, you've got this blue channel, light blue channel here. You've got the support over here. You've got the support where it says B for many, many days, for 2 weeks. You've got the same support over here. And then this was the bottom at D in March. So at the time when we were looking at what was going on in the summer, right, you've got something very similar here. You've got this support over here. You've got the bounce over here, and then it breaks down and it makes a bottom here. Exactly one channel deep, just like it did over here. So back, and it's perfect. It's to the point, right? And at the time, I remember when I was putting this chart together thinking, when we looked at this chart in September, this channel wasn't there, right? So this portion of the chart wasn't there. So when price came down to here, and I thought this is the bottom, because it lined up with the bottom that we had in March, and we had this amazing bounce, which I got excited about, but then price came all the way down again. And this is when I started thinking, well, there's something missing on this chart. And I went back to what I thought, and there's this idea of there's a channel deep, there's a break. So imagine this is what we're seeing all of 2023 up to here is like a big version of what happened along where it says B over here with that one little move down. So then you're saying, okay, let's put this here and we complete the chart. We'll complete first part of the chart like that, right? You get that move and it's, as I said, it's pixel perfect, right?
There's
And
always
then,
a lower and a higher channel.
there's always a lower and a higher channel. So when you break a channel, there's another channel underneath, and there's another channel underneath here, and there's another channel underneath that. And I came up with these rules, like Cook's laws of trend trading, right? And one of them was, if a trend's going to change, it's likely to happen at a boundary, or what I would call a weekly pivot. So if it doesn't happen here, it'll happen at the next one down. And if it doesn't happen here, it'll happen at the next one down. But it's more likely than not, if you're going to see a reversal, it's more likely than not to happen at one of these areas in the chart. So for those people who are doing, regression channels and stuff, they get very hung up on a regression channel being lost. But I said, well, there's nothing stopping you from adding another channel down. It's all about standard deviations and volatility, right? And you get another volatility range, you get another volatility range, which is what this is. But anyway, let me go a little bit quicker through this, otherwise we won't get there, right? So then what I started thinking was, okay, well, now that this has happened, so if this wasn't the bottom, and this was, then does this look anything like what we had back in March? And it does, it's exactly the same. So what you have here is you have this falling wedge, the identical falling wedge from the summer, right? So now what you have is the lows over here, which connect over here, and it's basically the same idea. But let me just fast forward a little bit. The move from the bottom in March was identical to the move from the bottom in November. It has the same support. It has the same blue support. So when people were shocked at how quickly the market moved up from the lows, I wasn't, because I was expecting that if this turns out to be the same as what happened back in March, there's a chance that it might move up as quickly as it did back in March, because the fractal is the same. So if all of this, basically the assumption is, if everything that led to this point is the same, then why shouldn't what follows this point also be the same? I'm not making any new assumptions. I'm assuming that it continues to be the same, right? So you get this move up to the edge of the wedge, you get this move up to the edge of the wedge, and back in the day at this area over here, I was looking for a deeper pullback. Maybe we get down to, like we did over here, down to the 200-day moving average again, maybe down to the 200-day moving average again. But when we didn't, and we held the 9-day moving average, I thought this is different. And I remember saying at the time to the guys on my weekly call that this looks different to this over here. And so the question is there any reason why this might look different? Then you start saying, well, is there any reason why this might look different to what it did in March? And there is a reason why. We're closer to the end of a rate cycle than we were over here, right? We're closer to the end of inflation peaking and everything else than we were over here. So if this was, and I remember on the call when we had back in September, I remember saying, this market has gone through a 2-year period where the moves down have been largely, I think, without fear. Right? We made this move down in a year, and even though there was pretty steep drops, the VIX never got over 33. It never got to 40. Remember that, we talked about that, right? So despite the fact that the VIX never got to 40, the market still made lower lows. And at the time, I remember saying the VIX doesn't need to make higher highs all the way to 40. It doesn't need to. The market's still going to go down anyway, right? And then what's followed that from October is a symmetrical move all the way up, as quickly as the move down. And I remember saying at the time back in September that, as we get closer to this period over here, then maybe this does mark the end of a cycle which lasted 2 years. And possibly what follows this is easier markets, which would mean 2024. Right. But just let me just add on a couple of things with regards to how the markets have moved. Now, it's not coincidental that this happened at the edge of this, what I'm going to call the egg, right? Because it looks a little bit yolky, doesn't it, right? So you've got this resistance over the last 2 or 3 weeks over here. Now, I added this element, this egg, when we were here, on this first candle here. And the idea at that time was, once price begins to consolidate, it may consolidate like it did in April and May. Right, so you can see that already what I've been doing with this chart is forecasting how price not only breaks high, but also how it may consolidate in the trend. right? And so back in March and back in April, we had this quite wide-ranging consolidation, which lasted 2 months. So my starting point was, once we start, once we reject breaking out of the egg, then we could see a 2-month consolidation window in the market. And it wouldn't be unusual given how far the market's moved up to get here, right? Just like it did over here, just like it did in April. And so at the time, I remember saying, well, we are likely to hit the bottom of this egg if we lose the moving averages. We lose the 9-day moving average and we start consolidating. So over here, back in April, you see the market held the 9-day moving average grudgingly, but it held it for about 2 weeks, right? So from here, which is, let's say, the 5th of April, all the way through to the 20th of April, it held it for 2 weeks. Not that different to here. And that's one of the reasons why I thought there may be a chance that we just, while we hold the 9-day moving average, there is zero risk in the market, at least as far as the ES is concerned, and where ES goes, and not most, mainly the sectors will be supported, right? So whilst we hold the 9-day moving average, then this is going to be okay. And if we don't hold the 9-day moving average, then it brings closer the possibility that we consolidate all the way to 4,450. So for me, the last 2 weeks were, let's just get it over with. Right? If we're going to go down to 4,450, which is not that far, it's like 4,590 to 4,450, 150 points, 3%. That's like nothing, right? It's not much, given how much we moved up so far. 3% pullback wouldn't be too much, and that's why when everybody out there is saying, to 448 or to 445 or something in SPY, it's not unreasonable. It's not unreasonable, but the market didn't want to do that. So what we see so far is now, so we see prices getting squeezed along the boundary of the egg as the 9-day moving average arrives. So what I was looking for was the price either to, as this convergence takes place, for us to either break down, consolidate between the 9 and the 20, and then go down to 4,450, or if it turns out to be different, and this is where if this area is different to what happened before, then it could explain why we're seeing more strength here. And remember, back here we had
I think I lost you. Can you guys hear me?
I can hear you. I just can't hear Cookie.
Oh, you can't hear me anymore?
Oh, there you
Now
are.
we can.
Oh shit. Hopefully you caught most of what I said.
It was just a
the
moment there.
Yeah.
Okay, just a moment there. Okay, got it. So I was going to say that this might have happened anyway. It's just too organized, and maybe it's for another podcast. I don't know. Maybe let me just throw it in there as a bone for the next one, right? I think the markets, and I've talked about this before, how the markets are managed in terms of speed, right? In that the market could go all the way to, this is too organized. This 2-year cycle is just too organized for it to be random and based upon events and world events and stuff. So, so the conspiracy theorist in me says, well, what's the motive? What's the objective? Well, prices going too high would affect inflation. Right? So nobody wants the markets to go too high, especially when there's an inflation problem. So let's slow down inflation. So how do we do that? We use the VIX. So the VIX ends up becoming not a fear gauge, but a thermostat. Right. So this was the big moment for what, as far as like tying different ends together, that the VIX is used as a market thermostat to speed up and slow down the market. And when you look at the ranges, which we talked about on a call 3 months ago, it makes perfect sense because it is regulated from the high and the low point in that range. The VIX topped out at 21, which is what we talked about on the call last time. That was the bottom in the market. So the VIX didn't break out, but instead it fell back from 21, and we get that move, right? And now the VIX is near the lows of the range, although there's still a couple of points in that range that could see the market still go a little bit higher. But anyway, let me continue, because there's so many things I could talk about here, but let me just continue. So what happens next? So one of the things that I modeled was, when we got to the end of the egg back in May, there was a push above, and then it back tests when the egg ends, right over here. It back tests over here, or basically the meeting between the large ellipse and the small ellipse, right? When these two meet, then there's a back test there. Let's call it a technical back test. So this is what that blue space here is. So what I'm looking for here is for prices to get up to 4630. All right, so this is the 4630 that other people have seen on their charts as well. So we get to this area here, we back test, and it wouldn't be much of a back test. We end up going down to, I don't know, 4610 or 4605 or something like that. The 20 MA will catch up. The 9 MA will hopefully start pointing up and will break higher. And this is where we'll end this period. So this will end up being a 1 month consolidation, and then we'll get a further move higher. Let me just say in terms of expectations what might come next, right? And let me just so you can see how detailed this is, right? I mean, and none of this is based upon hunches or gut feelings. It's based purely on what prices have done in the past. And one of the things that, you know, when people talk about 1987 and 2008 and all this stuff, the reason I smile is because price is just repeating what it did 4 months ago. It's just moving through this shape slightly differently. There's less volatility, but it's moving through the shape. And, you know, this boundary is being respected perfectly. And it's the same as it's the same boundary that we had over here. But for whatever reason, price, you know, let's say external catalysts and news and stuff, price snakes its way through this egg slightly different to what it's currently doing over here. There's no negative catalyst in the market now. Right? So there's nothing that's going to bring this down. Well, there's nothing at present that's bringing this down. So in the absence of those catalysts, price is gravitating towards the top of this yellow space, which it will break out. Right now, let me just talk about what comes next, what could come next. Right, these what I call teardrops. Right, so this large arc over here. This is how price breaks down over here. You see, it gets so as it breaks out, it continues, and then when it finally loses the arc, that's when you start seeing a new consolidation take place. Right, at least as far as these two cycles are concerned. So for me, as long as we hold this arc, there's nothing to worry about. It's just dip buys. Well, we're quite far away. We're quite extended away from that. But and the reason is being back in April, we moved sideways and we got quite close to this, and then we moved up. But this time around, we're just nowhere near it. So future corrections could come down and retest this curve. But assuming that we hold the curve or inside of this curve space until the curve reaches the top where it says A, right? So we've seen tops at A and A. Then over here, we end up at 5,000 in the month of March. All right, so that would be where I'm thinking. Now, remember when we talked about this chart on the last call, I had 4,650 or something, or 4,700 by the time Santa comes around. Now, that could still happen, right? So right now, the way the markets are looking with the moving averages and the consolidation looking like it's over, then we should hopefully get a move higher. Let me just point out something as well. Once this consolidation ended over here, the move up was just as strong as the move that preceded it. So this is where, and I mentioned this on Stockters, I think once or twice as well, is people who are wishing that the market breaks down just don't understand what's possible in terms of opportunity here. And the opportunity is that you might have missed this, but we might see the same again following this consolidation, because that's what we've had. That's what typically the market, you'll see symmetrical legs, right? So you've got this strong move up in March. It goes sideways for a month and a half, and then you get a move which is all as good, if not better, than what preceded it. And it moves up at the same speed. Let me clone this trend line. It moves up at the same speed for 4 weeks. And then once it consolidates, it does it again. It does it again for another couple of weeks. And so over here, you can say, well, okay, if we get that, so after this consolidation, what might the move look like? You start saying things like this. And clearly, I don't think we'll hold this. Well, I have no idea, to be honest. I mean, I was going to say, because it just looks too good to be true, right? That we're going to continue vertically like that for another 3 or 4 months or until January, right? But certainly there's a possibility after this consolidation ends that we get a move as strong as the move that preceded it. And I think that's what people are ignoring. And I think whilst it's all well and good to manage the risk out there, you're not going to get wealthy by managing risk. You preserve the capital that you have when you manage the risk, but you only get wealthy if you manage the opportunity. And if people aren't even looking at the opportunity, then how the fuck are they going to get anywhere? So I think there's a combination of things here, right? You manage the risk and you manage the opportunity, and you've got to see the opportunity before you manage it. And hopefully that's what I'm hoping. That's what I'm hoping that some of these charts might do. Thoughts?
That would be an amazing run to follow that last trend up that you just placed on there.
And the thing is, people say, oh, this market is unreasonable that it's done that. And I say, well, but it's always done that, right? Look at this trend line over here. Okay, slightly not, no, I mean here for like weeks, or here for weeks, here for 10 days, here for another 10 days. So when the market moves up, it tends to move at the same speed that it's done in the past. It's not unusual for it to do that. So now, so holding the 9-day moving average, and as the 20 gets closer, as this squeeze takes place, what tends to happen is the longer the consolidation, the more shorts get involved. And so the initial move is a short squeeze. And that's why you get these strong moves up, because everybody spent 3 weeks piling into shorts. And if the market doesn't break down, they just, I'll push them out 2 weeks. I'll push them out 2 weeks. I'll push them, and they're holding more and more and more short positions. And because they're thinking the market's got to pull back. It's got to pull back because it's gone up so much, but it doesn't have to, just like it didn't do over here. This is a 2% pullback for all sorts of reasons in the market that we're talking in the world, in the market, whatever, which we don't have over here. So in the absence of those catalysts, bring it. Let's see another 10% move up in the markets. Right?
Yeah, it's fuel, right? Ultimately, if the shorts don't play out, it's like from a structural perspective,
right?
It's fuel that adds to the fire, right? Because if it's
right.
It's the same way, right? Like if people are buying the breakouts and the breakout fails, it's fuel to the fire, which is why it usually ends up breaking lower than the original breakout, because everyone who bought is now underwater and they'll hold on to it for a while. They realize it's not going to turn, and then it accelerates to the downside.
Yeah, and also it's a shame because the market deliberately spins people around for weeks, and then when the market does push higher, nobody believes it, and what that does is either they just ignore it or try and short it, which is the worst, or they take quick profits, premature profits, and what that does is you'll take 3% on a 10% move or a 12% move, and it's you end up just working you end up working so much harder than you need to. And that's one of the reasons why I say the messages that are put out on stock tweets. And it's not because I don't like day trading. I love day trading as much as the next guy. But I think many people exclusively day trade at the cost of easy swing positions, right? And maybe some of these high beta names have thrown people around and they've been pushed around a lot. Then start again, swing easier positions. You don't have to swing shit that goes up 10% and down 10% every other day. You don't have to do that.
And if you just add that, Cookie, I think I think when a move happens, a gut reaction by many, right, is okay, I need a mean reversion here, and it's got to go lower after a big day. I mean, just look at AMD today, right? AMD's up 8% right now, roughly. And I guarantee there's people out there buying puts at every spot during the day. How, and I know we're not necessarily talking day trading here, but in a trend that has started, I mean, I think to a large degree, we're showing that while, yes, it's up off the bottom from D, I mean, human nature is, I think this has to end some point. How do you fight that? How does one get in the mindset to be like, I just need to ride the trend and not be locked in on trying to catch every breath of the market, because you'll never be able to do that.
Right. And that's a great question. And I think the answer to all of these questions has to be thought through the lens of easy to execute. Right. So a lot of the work that I do is how can I make it so that it's dumb easy, like really easy to follow, right? You don't need a zillion indicators. You don't need to follow lots of shit. And I'm glad you asked me that, because I can say this. This is a perfect place to say this, right? There's 2 types of trend. There's 2 types of uptrend, right? And I'm going to dumb it down to just 2. I mean, clearly there's going to be like 1,000 others, but there's 2 that you just need to think about. The easiest uptrend is the one that follows a 9MA on any time frame, whether it's the daily, the weekly, whatever time frame you choose, right? So if it's following the 9MA and it's finding support at the 9MA, that's the best uptrend you can get. right? And actually, can I just get something? Let me just get
Yeah.
because this will be very
so like
practical.
when you say that, Cookie, just a quick
Yeah.
example, because we're talking about AMD. Yesterday, AMD's candle was absolutely disgusting, and it broke the 9 SMA.
Yeah. Okay. Let's
Right.
take a look at AMD.
So
Let's do that.
like now that you got stopped out because that's your trend change, you are now frustrated because the move is obviously to the
Yeah, okay.
upside here.
Well, no. So let's take a look here, right? So you've got the nine. So this is AMD daily chart, right? So you've got the 9-day moving average over here, right? It is the daily, right? It is the daily, right? Perfect.
Yeah.
So this uptrend lasted until here. Right, then it got a little bit tricky, but it was easy until here.
Yeah. But like today's move, right? Like this is a frustrating move
No,
as
no,
it
of
broke the
course,
9
of course.
MA, then
No,
rejected
of
it
course.
yesterday.
No, it's fine. So take it for as long as it lasts. If you get shaken out over here, and then then this is a new trade. Then you consider the new trade, right? So let's say and so I'm not saying here that it will last forever, but take it for as long as it lasts. So here you've got an uptrend which lasted a month, and then once it's gone, it's gone. And this is I'm just saying this is the easy uptrend, right?
Yeah.
But there's two types of uptrend. Let me say that, right? So the easiest ones are the ones that will respect the 9 MA. But then there's hard ones, like, for example, Tesla.
Right.
So
that was going to be my next one. Is
let's take a
when
look
the
at Tesla.
Tesla moves finally happened, it's frustrated so many that most people are going to be out at like 267.
Head and shoulders.
Just wait one sec. Oh, damn, where is it? Let's wait. Oh, fuck. Just wait. Whoa. Back to that chart. Give me one second. I'm trying to get my menu up, but it's hidden behind. Just give me one second, see if I can work this out. Here we go. Here. I'm going to need the menu for that. Okay, hopefully you can still see the chart. Can you still see it? Okay, you can, right? Okay, good. Right, so let me get this. So this is a Tesla daily, right? So I'm going to show you two uptrends, right? So you've got this period here, which, so this is a daily chart, right? Can you see it? Just give me one sec. I'm going to put it on the weekly because the weekly is a lot easier, right? So for Tesla, right? So you've got this one, it doesn't respect the 9 MA very well, right? So it goes up, which is great, and then it comes down and it finds the 20 MA, right? Then it goes up, then it doesn't respect the 9, and then it finds the 20 MA. So this period here, and so I want to answer the question, we'll go back to the question that you asked, which is about how to hold on to winners and overtrade, which is basically the question, right? So here, let me just point out this uptrend here, right? Let me move that to the back. Right, and I'll give you a comparison, right? So you've got so it's still an uptrend. You're seeing higher highs, higher lows, traditional uptrend, you know, in that sense of it. But it's not clean and it's not easy, right? Every month you get shaken out, right? That's horrible. Now compare this to, for example, I don't know, Netflix, your favorite, right? Let's compare this to Netflix. So what did Netflix do this year?
It's terrible.
Terrible. But there are periods when it holds the 9 MA for much longer times than others, right? Then let's say the harder uptrend, right? It's been horrible now, but whilst it was holding the 9 MA, it was easy. Once it lost the 9 MA, then it became a pain in the nuts for many, many weeks. There's others which are even easier to see. Let me show you Meta, for example. Right? So let's take a look at Meta. Right, so this is a perfect one, look. Yeah. So there's no reason why you would exit a trade like this until you see a close below the 9-week moving average. And then what happens is then it starts misbehaving. So the moral of the story is if you see an uptrend which is respecting a 9-day moving average, let it play out without overtrading it.
Yeah, right? Agreed. Once it breaks below these key areas, moving averages, whatever you focus
it gets messy.
on,
it starts consolidating. Basically it starts consolidating. But there are others which rarely get into a trend that looks like this. Well, let's go back to Tesla again, right? Just go back to Tesla. But it does, but it's not doing that now, right? So let me go back to Tesla over here. So Tesla over here, it held the 9 for weeks and weeks and weeks, months, for a year, right? So what you have here is two very different types of uptrend. You have a very clean uptrend over here following the COVID bottom, and you have a very messy uptrend here. So the point here is, once you recognize an uptrend as being of the messy variety, then maybe it doesn't make sense to be fully invested in that trend until you start seeing respecting a 9-day moving average again, and not going down to the 20 every time. So going back to the chart that we looked at earlier, like for example, the SPY daily or the ES daily and stuff, it's been a clean uptrend until a week ago. And only now has it started really playing around either side of the 9-day moving average. So to bag your question earlier about how can people hold on to positions, look for these really simple clues. And it doesn't have to be complicated. Whilst the trend is holding a very clean 9-day moving average, then there's no reason for you to overtrade it, right? And where there's others which are a little bit more complicated, then either you just scalp those, you day trade those, or you just hold smaller swing positions, which is what I've been doing. So in the case of Tesla, waiting for it to morph into, so the question is, can this morph into a trend that looks like this? Right? And the answer is yes, it can. So what you'll tend to find is you get strong uptrends like this, which lead to consolidations, then you get messy uptrends, and then hopefully this then emerges and it gives you something that looks like this again. Let me show you another chart on Tesla just for the sake of the discussion. Right? Tesla,
I think NVIDIA is probably the greatest example this year of the 9MA, right?
Yeah, NVIDIA is very good. I mean, it's just like Meta.
Yeah.
I mean, it's the same chart. And actually, even Apple. So there was three. There was Meta, Apple, and NVIDIA, which had the cleanest, sweetest uptrends. And then when they lost that 9-weekly moving average, they just started consolidating for weeks and weeks, right? But just as far as Tesla's concerned, and hopefully it's not too messy, but we looked at this chart, I think, on the call in September as well. It's the same chart, right? So what I've got here is you've got basically, so again, this is on the weekly time frame. You've got price moving up in a nice clean uptrend, and then it consolidates like this in this blue box, right? And you've got this double bottom on the 50 weekly moving average, and it's basically done the same here, right? The only difference is that this uptrend that followed the bottom at the end of December was nowhere near as pretty as the bottom that we had in COVID. So it was always struggling. It was always up against the ropes. This uptrend was never that clean from the beginning. Right. Once it started doing this, then you say, well, hold on a second, it's not as good as it was back here, right? So you get this period of very, very nasty consolidations, and very, even though it's an uptrend, it's not that great, right? Or the uptrends don't last very long above the 9-weekly moving average, and then it breaks down into this consolidation, which is the same as what it did in early 2021, right? And this lasted for months. This lasted from January all the way through to July. So this was 6 or 7 months. It's not that different to here. So this is from July to December. Right? So you've got the same 6 months period over here. And then, so this is the point I want to make. Can a messy uptrend morph into something that looks better? Well, after this period over here, you had very, very strong run in Tesla. So because what I wanted to try and forecast was what might a future uptrend in Tesla look like following this period, because if it ends up being another shitty uptrend like this, then it's not going to be as great, is it? But what I want to see is something that looks like this, which lasts about 3 months. It might not be as vertical as that, but it'd be great if it does. And I'll know what to look for. So if at the first attempt to hold a 9-weekly moving average, it can't hold it, then I'm going to say, fuck this. Even if it bounces and it holds support, I'll hold a smaller position, because going forward, I know that's how it's going to behave in the uptrend. It's going to be badly behaved in the uptrend. So these are the type of things that I'm looking out for and to be ready with. And, we talk about mindset and being prepared for things. And I think this type of work that I've done, it really helps us manage expectations of what could come next. And I think one of the reasons why people are so frustrated is because they have no clue what's coming next, because they think it's all random, but it's not. So once you start thinking in these sort of terms as to how the trend might move, then you're prepared for that trip. Whether you take it or not, it's up to you, but at least you know what's possible. So here, as we come out of this move, out of this consolidation in Tesla, I am thinking about, do we take path A, which is vertical, or do we take path B, which is going to be messy as F, but it could still get to 300? And I'll know that depending on how it reacts with a 9-weekly moving average when it first gets there, when it comes back to it. So what I'm looking for as far as Tesla is concerned is as it breaks out, I'm looking for 270 on Tesla, right? From a different chart, taken from a different chart, but around about actually, look, here you got 270 there as well, right? So I'm looking for this area around about 270 on Tesla. I wanted to get there, and then I wanted to come back and test the 9 weekly moving average, right? And hopefully by then, the 9 weekly moving average will be around 245 to 250, something like that. Maybe, yeah, 240, something like that. So for that to shake out the chasers, and we know Tesla will love doing that. Just done it forever, right? So longs get frustrated, shorts get frustrated, and then it goes up without anybody, right? So I'm looking for it to do that, for it to break to go as high as 250, 260 in the next 2 weeks, and then pull back, test the 9 weekly moving average, and then how it interacts with that 9 weekly moving average will give me an idea of how quickly it gets to 400 or not.
I love it, Cookie. I love it.
Cool, right?
I love it.
It's all very logical, and there's no bias, and there's no guesswork there. It's just based on probabilities on what is done in the past, how it's behaved in the past in uptrends, how it's behaved in consolidation, and using that as a guide to how it could move in the future. And especially for those who are trading options, that's valuable, right? Should I look at weekly options? Should I look at 3 months out? Should I look at leaps? Well, depending on how the trend moves, if it's going to be a shitty as a hell trend, then if you're looking at 400 as a target, then you want to buy leaps. You don't want to be buying 1 month or 2 month strike days and so, because it might be really messy along the way. But anyway, let's see. Obviously, I would love to see something like that.
Hey, Cook, we got about 10 minutes left, and I know there was a lot that you wanted to go over, and we have gone over a lot already, and it's been fabulous. Anything else that you want to hit? We have a hard stop, and I hate to cut you off while you're rolling, but I know you had a lot that you wanted to go through.
Unless you guys need to go. Do you want to talk about crypto?
I would love to. I brought this up on our last call.
Okay, let's take a look at that.
And I believe your quote was, "Well, it hasn't taken out the 9 yet," and I'm like, "Well, I think it's gonna."
This one here, it's the same chart. So this is the chart that we looked at the end of September.
Yes.
Right? So this is the week that we were here. And at the time over here, I was like, I don't care what it does. I will buy it if it crosses that line.
And you said, I've sold everything. I'm not in, right? Like that was the moment.
But I'd sold up here.
Yeah.
Right? So I'd sold weeks ago, right? So I was like, when it gets to here, then I'll decide whether to get back in here. I bought at 26,000 around in this area over here. And I bought just before it broke higher, right? So I bought here. And so then what it does is basically going vertical, right? It did that. It did the move that I thought was possible back then. But I want to share one chart with you later. Just and remember, I said I want to blow your minds with a chart. I'll show you something just to give you an idea of what Bitcoin might do. But so it breaks higher from here. It goes across this blue channel over here. It breaks out. It consolidates. It tries to consolidate over here. And I put this red arrow. I thought it might stay around for a few weeks, but it didn't. It's very strong. So it got all the way through there, back test. And then it breaks higher, right? Now, I've got a target here of 47,000. Now, 47,000, just in case you're wondering, it's basically the bottom of this next blue channel, right? So, we talked about how you can stack things up. You lose a channel, you go down to the next one. It's the same idea with these, right? So with these shapes over here, let me just zoom out a little bit so you can see. It looks like a pirate ship. But so now we're over here inside this green channel, and the top of that is 45,200, which is my exit. Right. But in terms of what it might do next, I just want to point this out. So far it's following this. It's following this move up. Now, let me just point out a couple of things which are important and quite relevant here. What you see here is as price gets to the top of this green channel, it consolidates below that green channel until the 9MA arrives, which takes 3 weeks. Right. So following this strong run, which is not that different to, it's not that different to here. Right. So you've got the strong run. It could consolidate for 3 weeks until the 9 weekly moving average arrives. So I put that little yellow circle there to signal that. Now, the low point I'm looking at is 42,100, which is a pivot that many people had anyway, right? So 42.1 is that support over here. And the reason why I'm thinking that it might not go below 42.1 is because over here in the consolidation, it held the center line of that channel throughout. It didn't go below the center line of that channel. So again, I'm just inferring what might happen based on what it's done in the past, right? So whilst it holds the 9 weekly moving average, I'm not looking for it to go below the center line of that channel, which is 42.1 over here, right? And then what's important here is the move doesn't begin until the 9MA arrives, right? In other words, this was not the move. This was the move, right? That was the effing move. It was after the 9MA caught up and it pushed price through this blue channel. In other words, and if you notice here, the 9 weekly moving average is at a very similar place to where it was over here, right? Just below that red top of this blue channel, right? This red marker of this blue channel. The 9 weekly moving average is somewhere about here. When
Crypto bears are going to hate you for this one, Cookie.
Huh? What?
Crypto bears are going to hate you for this.
They hate me anyway. They hate me. I block most of them anyway. I don't give a. But anyway, yeah, they hate me anyway. They really do. So as the 9MA gets closer, tick tock, tick tock, tick tock. Right. As long as it holds a 9 weekly moving average, it's fine. But ideally, it holds 42.1 and it completes the consolidation over here and it goes ballistic. Right. And going ballistic means at least 55,000. Now, so that's just, in terms of what might happen next and in terms of expectations. So I'm happy to see the pullback at 45. And on Stocktwits, I think I remember saying, I'm cool and I was all cocky and stuff. I'm okay with it as long as I'm not going to be selling until it gets to 45, right? And even here, you don't have to sell anything. I mean, the thing is, because crypto is big, Bitcoin has big numbers, you're like, well, shit, it might tank 10,000, but it's just 10%, less than that. It's not that much. So some people might choose not to sell. I've scaled at 1/3. From here, I've been day trading a little bit, but I've scaled at 1/3, as close to 45 as I could get. So I'm still holding 2/3 in Bitcoin. But let me just show you one other chart. Big picture stuff, right? BTC monthly 7. Okay, so this is the weird chart. Right, so this is Bitcoin since it was born. Right now, this is not one of my new ones. I think this is Pivotology 5.0 or something, but so it's already a couple of years. And I want to just highlight the significance of where Bitcoin is right now. Right. Let me highlight this ellipse over here. Right, so you can see that was the high. That was the all-time high back in October 2021, and that's what we crossed 2 months ago. Right, so that's what we crossed 2 months ago. So for me, as far as where Bitcoin is right now, is holding a very important breakout. That's not that different to this breakout over here or this breakout over here. In fact, the way that I model Bitcoin is, I think this period over here is the same as this area in the chart. Right, now, if now that I've said that,
you've only just begun.
Exactly, right? So we are here. So this is can you notice 2 shaded areas, right? So you've got this darker area and you've got this lighter area. Same here, you've got this darker area, you've got this lighter area. So we've moved through, let's say, 6 floors. We consolidate for 2 years, right? We move up 6 floors. We consolidate for 2 years. 1 floor deep, as it happens. Can you see that? So it's 1 floor deep, just as it was in 2014. Identical, right? So the consolidations are the same. The move up is the same. And now we're seeing the moving averages about to break out. So remember we talked about the 9 weekly moving average, right? So here what you've got is, as the 9 monthly moving average crosses 33,000 in the month of January, which it will, you'll be in this area of the chart over here. Now, this time around, the 9 is already above the 50 and the 20. Over here, the 9 was below as it crossed. So there was a period of consolidation which lasted 4 months in 2016 that we might not get over here. Right? So this consolidation really is because of the fact that the 9MA is still below the 20, so it's not really a clean up trend yet. But once you get that cross, it didn't look back for 2 years. Now, if that was the case, then what I'm projecting as far as where Bitcoin might go from here is, how quickly it gets there. It might not be as quick, but certainly in terms of like minimum move, I'm thinking that, because this is what, again, going back to symmetry and stuff, right? Price range. Price will typically repeat this move 800%. Right? So 834% is the height. Can you see that? Can you see this move over here? That's 800%. Then it's another 800%. So each of these 3 floors, as I'm calling the floors, is an 800% move. It's always the same. It's a log scale, right? So it's 800%. So from here, I'm thinking 800%. So if I was to do that again, we'd get from here 850%, 250,000. Right now, whether that happens, obviously, it's not going to happen in a month. Let's say it takes, a year or so. Right? I'm thinking we end up somewhere around maybe, I don't know. We could even do more than that, right? Because this move was more than 3 floors, right? But I'm thinking we could get to this area, the other side of this red space over here, whenever that happens to be.
Digit Bitcoin is music to my ears.
So I think it's important that people realize this, that while it holds the breakout, while it holds the trend, remember we talked before about trends, right? Here is an example of an easy uptrend, right? So now we're joining the pieces of the discussion together. This is an easy uptrend. It holds the 9 MA. All of the dips in the future were to the 9 monthly moving average until it lost the 9 monthly moving average. And then you say, now I'm going to get out. Because whilst it might not die, it'll go sideways for a year and drive you crazy and you give back all your gains, right? So here what I'm thinking is, whilst it holds the 9 monthly moving average, there's no reason why anybody shouldn't be holding at least a partial position, given the opportunity that's ahead. So then we get back to this 59,000 level. So that would be my near-term target in Bitcoin within the next 3 months. Easily, possibly within maybe in February or something, while the trends hold, right? So whilst the 9 weekly moving average holds, whilst the breakout holds, I'm looking for us to get to 60,000, which is basically all-time highs again. And if you think about what happened over here, it gets close to all-time highs relatively quickly after this consolidation, right? Within 2 months, it's already close to all-time highs. So I think we could end up something like that. Right? I won't bore you with my Ethereum charts, but
no, I'm giving you a standing ovation right now.
That's pretty cool, isn't it? And if you look at it zoomed out, it looks fine. It looks absolutely fine. It looks wonderful, in fact, right? And whilst I'll be day trading sometimes and scaling in and scaling out and stuff, my starting point is understanding what the big picture and the big opportunity is, right? And then I day trade around that, knowing what's going on the bigger time frames. And this is going back to what GP said, I think, on a comment as well before. People don't just use big time frames enough. And so they end up over trading, not being in positions because they just don't realize what the potential is there. And I'm hoping that if Bitcoin does this, then there's no reason why NQ or the NASDAQ doesn't do something similar. Obviously, it won't be the same magnitude, but certainly it will be very unusual for Bitcoin to do this and nothing else does. Right? So we go back to opportunity for 2024. I think everything is setting up, whether it's small caps, biotech, crypto, the QQQ, all that stuff. It's all setting up, right? And I think let the market show you that that's not going to play out, but give it the benefit of the doubt whilst breakouts hold. That'd be the way I'd set it up.
Cookie, one last thing. We do our quarterly stock picks, and we just had them end this past Monday. We're going to have another quarterly stock pick for this upcoming quarter on Monday. You want to take part in it? You want to wait till Monday and shoot me a DM and say which stock that you like for the quarter?
Right. Any conditions?
No. We're just playing whoever gets the most gain. So you can say I want to short this or I want to long that, and
full disclosure. Full disclosure. Sorry? I'm going with Nicola.
Oh, really? Okay. Dude,
look at the chart.
Okay, let's take a look at the chart.
GP's already made his announcement.
Okay.
He teased it Monday, but yeah.
Right. Okay. Do you want to talk about it? Do you want to talk about Nicola?
Sure. Let's talk about it.
Okay, let's talk about it. I don't like it, but I don't know what you see in it. What do you see in it?
I see volume. I see accumulation across the board.
Yeah, it's because I ignore volume completely. That's why.
I know that's what that. So, but if you're looking at some of these dailies and weekly time frame, I have no clue why it would actually go up, to be honest, right? But this is one of those. Let me be chart-based conversations. And to me, there's been a lot of accumulation in this stock and very little selling. So I don't know why it would go up, but then again, I didn't really think Carvana would do 900% this year.
And of course,
very similar setup to Carvana.
in fairness, GP came in last, and how he's swinging for the fences. He's going for the grand slam for 1,000% gainer in 3 months.
You know what I would do with Nicola? I'll tell you how I'd trade it if you want to know, right? I'd buy it. I'd buy it above the 9 monthly moving average, below it. That simple, right? And the reason why I do that is because let other people get fucked up with this area over here, right? And if you look at how it's rejected the 9 monthly moving average since forever, then it's a very clear barometer to whether it's going to do anything, right? And what I would do is once it gets above the 9, look for the 20, because that's what it's done each time. So once it gets above the 9, it'll get to the 20, and that's already a reasonable move, right? So from here, it's 120%. So what I would say is, yeah, I'd get involved in Nicola if it takes out the 9 month moving average, and if it doesn't, under the bus, right? And the reason why is because but I hear what you're saying, volume, and maybe some people are buying. There's got to be a reason for it and stuff, but it's because it's put in. It's gone down what 90%.
Yeah, it's a garbage stock. There's no I'm not saying invest in it.
Okay, it's just a trade. I get it. I mean, why not? Swing for it. Go for it.
Yeah, it's whoever has the biggest gainer, percent gain over the 3 months of the quarter. So
I'm pretty sure bags will come in at exactly 18.44% again.
What did bags pick?
Whichever way.
Well, about a month left, we was like, let's pick a short too, and GP's long and short were within 2/100ths of the same percent. So it was quite phenomenal.
Wow, it's good picking. That's very good.
I just stay consistent. Consistently shitty.
Hey Nick, are you there?
Yeah, I'm here.
Oh, I hadn't heard you all day, Nick.
I'm just taking it all in. I don't chart the same way, but my thought process is very similar in that I like to use the moving averages as just behavioral identification. So it's you could probably take any ticker out there and kind of mess with whatever moving average you want and find whatever moving average that particular stock really respects.
Mm-hmm.
And then just use that as, again, your gauge to identify both trend and behavior. As soon as that moving average gets taken out, okay, behavioral change, something's different here. What's going on? And I agree with, I kind of same thing. I think people, and as how the amount of information that we are exposed to and the speed at which we can find that information on the internet has resulted in people micromanaging these trades on on a daily basis, where it's no wonder yesterday all the bears came out, but it was and it was kind of an ugly candle in some of those charts, but at the same time, the volume wasn't really there on a lot of them either. Now, I'm not saying I necessarily expected this kind of move today, and I definitely got chopped out of a couple names, but I think if people started thinking in the way that you do in terms of I don't know, I'm kind of at a loss, but it's they're trying to scare you or wear you out of these positions.
Mm.
And if it's not one, it's the other, especially in the sense that we are in an uptrend.
Yeah.
So anyways, I've just been taking it all in. I love hearing you talk. So much appreciated.
And I love hearing you guys talk. And let me just say, I listen to your pod every Monday over breakfast, right? Or Tuesday, because when I wake up, because you do it in the middle of my night. So I do listen to your pod. I do tune in. I'm not there live, but I do follow what you guys are saying on Tuesday. So keep it up. I love it. I think it's fantastic. And, I want to try and get, my little part, try and get you more subs. And I mentioned, I think on Stock Twits, that I'm happy to share and come on, and I appreciate the support. And if that translates into more subs to Bag's channel, then I'm more than happy to support you guys with what you're doing. I think it's great.
We love it, and it's our channel. I just created it, so
yeah, okay.
It's our channel. We've been doing this together the whole time, so Cookie, we just really appreciate your time. We talk about this stuff all the time. We appreciate you listening. But it's always a treat for us to have you for an hour every quarter. Like Nick was saying, we don't always do TA the same. And what I really like is when all of our different styles, so to speak, line up and tell us the same thing. That gives me more conviction in how I'm doing and how I'm trading, right? And it doesn't necessarily mean we want to be in a herd mentality and only go with people who are bullish or bearish like we are, and reinforce our bias. But when you have people that you respect and see people that take the time, as all four of us do, to try to learn and get better and put good stuff out there every week, it means something when we all are feeling the same type of way in general.
Awesome. Group hug.
Yeah, group hug. Hey, Cookie, we'll definitely be in touch for the next go round. But until then, a happy New Year. Happy holidays. We appreciate you, brother. And Nick, GP, same for you guys. I know we'll be on a pod on Monday, but just it's the only time we'll all be together before all the holidays. So just